Good morning, everybody, and welcome to Business Central training. We are going to be showing you core finance functionality on a Business Central landscape, and our trainer today is Michael Lai. Michael Lai is an extremely experienced finance consultant for Business Central, and one of the things Michael will be advising today is for you NAV users, if there is any particular feature that is not available in NAV that we are demonstrating in Business Central, then you'll be advised of that as well. So without further ado, let me hand over to Michael Lai. Good morning, Michael.
Good morning, Simon, and thanks for that. I hope everyone's doing well this morning. My name is Michael Lai, and today I'm here to talk about some of the important or useful features you can find in the finance module of the Microsoft Dynamics 365 Business Central. The product which was actually known as the Microsoft Dynamics NAV or Navision previously by some of you. I'll be using a demo company called Kronos AU, which is provided by Microsoft in any of the Business Central environment, to walk through the topics we have in the agenda. So the first topic I'm going to talk about will be the chart of accounts. In Business Central, chart of accounts is the core of the financial processes, which shows all your general ledger accounts containing the financial entries, where they will be used in the financial report and analysis purposes. And how do I get to the chart of accounts? I can, in Business Central, I can use the search button at the top right corner to get to the page that I want to. So what you're seeing here right now is the list of all the GL accounts. We call it chart of accounts. So basically the chart of account page gives you the overview of all the GL accounts you have in the system. So on this page as well, also give you a glance to each of the GL balance through the three useful columns that you can find on this list, which will be the net change, balance, and balance at date. In this demo company, you can see that there are some of the figures showing up to some accounts, like the inventory account, for example, in here. Depending on the date filter you put in the filter pane, as you can see on the left side of it here, I can actually put a date range by selecting the date filter parameter. And I'm just going to put in, let's say, 1st of January 19 up until 31st of December 19. Once I put in the filter, you'll notice that the net change, balance, and balance at date, the figures are changed for the resale item inventory account here. It depends on the date filter you put in here. So the net change will be the movements between the dates as I put in here, the date range in here, and the balance will be the balance up until the ending date filter I put in here, up until 31st of December 19. So anything from beginning up until 31st of December 19. And also there's a balance at date. So regardless of what date filter you put in, this will give you, the current balance as of today, for example, as of current. These three columns will give you a glance of your financial position or the balances of the GL accounts without even going through the standard reports like income statements, balance sheet account, or trial balance report, for example. And apart from that, we do have the GL account category and subcategory that you can define in each of the GL accounts. These two columns or these two information may not be available in the previous NAV version. It is somehow introduced later in the later NAV version. And this one gives you the basically the ability to filter the GL accounts based on a account category. For example, for inventory account would be the asset account, and also there is a subcategory you can use or you can define to each of the GL accounts, which can be used later to do the filtering. Let's say in the chart of accounts page here, you can add a GL account category filter just to see, all the asset accounts, for example. Or it can be used in all the standard BC reports as well, like the income statement, balance sheet reports. All this can be filter according to the account category or the subcategory. And further to the right, there is a column called account type here. Probably most of you are already aware of that, how it can be used. They actually used to define the purpose of the GL accounts, whether it is used to group a set of GL accounts. For example, you can see the inventory account here. There is a begin total and there's an ending total at the end. So it will group all the posting accounts. If you define the account as a posting account, means that you can post the financial transaction into those posting accounts. So the account type will help to define the or group a set of data, a set of GL accounts, and also to if you define as a posting account, it will record financial transactions into those accounts. With all these account types, it allows you to create an indented hierarchy list as well. As you can notice here, the posting accounts get indented further to the right in comparison with the begin total and ending total. So all this can be done by just running a function after you have defining the account type for every GL account. And there is a function called indent chart of accounts. You can run this one in order to have the system to go through all the matching begin and ending total accounts to create that indented hierarchy list for you. Now I'm just going to go into a little bit deeper. If I look at one of the expense account, let's just say I'm just going to go to a receivable account. Okay, domestic receivable accounts. If I click on that GL account code here, I get to open up the GL account card. So pretty much similar to the previous NAV version, you do have the GL account card where you can see all the information of a specific GL account, and you get to define or create a new GL account in the GL account card, whether it's an income or balance sheet account, for example. You can set up the account categories in here, account type here as what we have gone through. Now this can be set up in the in a GL account card. And from the GL account card, you will notice that there is a function or a field called direct posting here. I just want to emphasize a little bit on this one. Is you probably have already or aware of that as well. Direct posting field is used to prevent your subledgers, for example, your payables or receivables, from going out of balance with the GL. So this is very important to have the direct posting to be disabled for all the control accounts, so that any transaction you post to the other entities if it is an AR or AP, it should go to the customer or vendor entity before it posts the GL entries into the receivables account. Yeah, so that would basically prevent the reconciliation issue going forward. Apart from that, I just want to go back to the chart of account list here. Just want to quickly show to you the ordering of all the GL accounts here. As you can see, this all been sorted according to the GL account code here. And this GL account code in Business Central, it is actually sorted in string order. I'll just show it to you in a slide here. What do we mean by string order? So in string order, you notice that it gets sorted depending on the first digit, as we can see in here, regardless of the number of characters here. So sometimes if you have an inconsistent number of characters for your GL accounts, that may create the issue of getting the sorting right. So our recommendation is to have the same number of characters for each of the GL account. That would ease the sorting of however you want to insert your GL account in the chart of accounts. Okay. All right. So I'm just going to go back to my Business Central again. And there's one last thing I would like to go through with you for the chart of accounts is you're probably aware of that in the previous NAV version, you get to navigate to find out all the related entries, like for example, the subledgers from the GL entries. In Business Central, they don't call navigate function anymore, but instead there is if I go to the ledger entries, for example, so this is all the we don't have any. Okay, so we are in a different GL account. Let me just go back to the AR account. Okay, if I go to the ledger entries, and if I select one of the GL entries here, there is a function called find entries now. So it's works similar to the navigate function, but when you run the find entries, you get the same the same way that you can actually navigate through all the related entries, including the document as well. So this entry was created from the sales invoice, and therefore you can actually view the posted document, let's say by clicking the number of entries here to see the posted document, the source of the financial entry. And apart from that, you get to see all other related entries, for example, subledger, customer ledger entries, using this find entries function as well. Okay, so those are some of the useful features you can find when you try to navigate around in the chart of accounts. The next topic that I'm going to go through would be the general journals. So general journals, as everyone is aware of, is they're generally used by the finance team to post financial transactions directly into the general ledger accounts or between two other accounts. For example, like bank accounts, if you're looking to record the fund transfer between two accounts, you can use the general journal as well. What I'm going to do, I'm going to go to the general journals page in the Business Central. And you will notice that in the Business Central, on the ribbon, there's a function called show fewer columns. If I click on it, it actually changed the view or the layout of the general journal. This may be not. This is not available in the previous NAV version. Probably in the later NAV version, close to rebranding to the Business Central. But what you can see is in the when I show fewer columns, it gives me what I call it simplified view. So in the simplified view, you notice that some of the columns that you can see in the journal lines, it becomes the header. As you can see here, the document number, you define it on the header, and the posting date, you define it on the header as well. And on the journal lines, you will notice that there's only far fewer columns, as you can see here. So it will only show all the frequently used fields and also hide the rest of the fields. And you will also notice that there are two columns for the amounts instead of the standard journal lines that you've been using. One is for the debit amount and one is for the credit amount. So you don't have to use the negative sign to define whether it's a debit or credit amount. So this simplified view is useful if you just do a single transaction in one transaction date, for example, because you're defining the posting date on the header and the document number on the header as well. So yeah, if it is just one or two lines of journals, then it gives you the better sort of a faster way to put in your journals. So the reason that it's been introduced in Business Central is that it makes it a bit familiar with some of the accountants that have been using some of the most simple sort of accounting softwares. So it's trying to sort of give you that kind of look as well. But however, if everyone is used to the standard way of filling in your journal, and you need sort of much more information, not just one transaction, you need to create like multiple lines, and you need to have a different posting dates, transaction dates, and everything. And also you need to define the dimensions in the journal lines. Then you can actually switch back to the standard view by clicking on the show more columns here. And you have your standard view back, basically. So with all the related columns that you can find in either of the NAV or BC version. Okay. And apart from that, in the general journal, there is open and edit in Excel functionality. You already notice on the ribbon here. There's an open in Excel. So if I click on it, I can actually export the journal lines that I've created in the general journal into an Excel file. And I can simply just open up that Excel to see my journal lines in Excel. And next thing is that apart from opening up in Excel, BC also introduced a function called edit in Excel. So if I select this function, edit in Excel, it actually asks me to save that file into an Excel, and I can open it up. And if I enable editing, you'll notice that there's a navigation pane showing up on the right side here. Basically, there's an integration between the BC and the Excel in a way that I just need to sign in using the login that I used to log into my Business Central. Okay, once it's logged in, the system will need to retrieve the journal lines from the Business Central and have it populated into this Excel file. You will notice that there is a some information explanation showing up on the bottom at the bottom of the navigation pane. And once it's done, once it's completed, you will notice that the line has been exported and transferred into this Excel file. And you can actually use this as like the import function. You can fill in your journals in here. Once it's filled in, you can run the publish function here on the navigation pane to bring the additional lines that you have filled in the journal back into Business Central, so that you will get additional lines in there that you can do the posting. So it is very useful standard functionality already available in Business Central. And apart from that, you do have the capability to save the journals and use it for later by using a function here called save as standard journal. So any journal lines that you fill in, you can save it up and use it later by selecting get standard journal. So when you save as standard journal, you get to define what's the standard journal code that you want to use in order to retrieve it again later. Okay, so that's the standard journal function you can use. Okay, apart from that, you do have the another place where you can fill in your financial transactions. If it is recurring in a periodic manner, you can use the recurring general journals. Some of you may have already been using it. It's kind of a useful function that you can define what sort of information you want to retain in the recurring journal and how frequent you want to post this recurring journal and when it is going to expire, as well as how you want to set the balancing account, how you want to distribute to the balancing accounts, for example. So in the recurring method here, there are a few options that you can choose from. I'll just explain a couple of them. So we got a fixed and variable. Fixed, it means that it will retain all the information on the recurring journal lines, but and also the amount. So the amount will be retained as well. So if you're posting a recurring journal with the same amounts every month, then it's good to set up the recurring method as fixed. If it is variable, it will retain all the information on the recurring journal lines, except the amount will be empty out. So it will be zero out in a way that you need to put in a different amount again for the next recurring journal. There's a reversing fixed and reversing variable. So when it's a fixed, then the same, it will retain everything, including the amount, but it will, what the system does is it will also create a reversing entry on the next day. So it is good if you are creating a Kuro journals, which has the which is posted at the end of a month, and have it reversed on the first day of the next month. So you can use the reversing functionality without the need for you to manually create the reversing function on the first day of next month. I mean the reversing journal. Okay. Apart from that, you get to set up the expiration date of when the recurring journal will expire, so it doesn't post anymore. And also there's an allocation functionality. As what you can see in the allocated amount here. You can go to the function by selecting allocations on the ribbon. And you will notice that my balancing account, I have two balancing accounts for my recurring journal. One is posted to the repair and maintenance, and one is to the postage. And I can actually set up the allocation percentage here. So I can allocate depending on the allocation percentage that I set up, as long as it's actually equal to 100% for all the balancing accounts. I set 50-50, so 250 will be distributed to each of that GL account. I can use the allocation quantity instead of the allocation percentage as well. So both are possible. So this is helpful if you're doing the overhead allocation, for example. So you can use the allocation functionality in the recurring general journal. Last but not least is that if you somehow has made a mistake by posting a journal, you can always go to the general ledger entries. There's a reversing function. If the entries is created in the journal, you can always run the reverse transaction function on the ribbon in the general ledger entries to reverse the transaction with the same date. So if the month is not closed, you can always use this reverse transaction instead of manually creating that reversing journal to sort of correct the mistake. So those are some of the things that you can find in the general journals. So the next thing we're looking to talk about would be how we manage and reconcile bank accounts. So this is part of the cash management module in Business Central. First of all, you can go to the bank accounts to see a list of all your bank accounts that you can find in the system. So in the demo, there are 2 bank accounts. And so basically bank accounts, you can set it up in a way in Business Central to keep track of your banking transaction, including the bank account in foreign currencies. So not just in local currency, which is in AUD, but it can also be set up in a way to use different currencies. So if I open up one of the bank account cards, you will notice that there's under the posting pass tab here, there's a currency code that you can define. So if you have a bank account in USD, in US dollar, as in storing the funds in US dollar, you can specify different currency code. And therefore, once it's specified, if I scroll back to the top here, you get to see under the general fast tab, there's 2 balance fields. One is called balance, and one is called balance LCY. LCY means it is a local currency. So if it is a USD bank account, the balance field showing up will be in USD, while the balance LCY in local currency, it will be converted into the local currency or the reporting currencies for your system. So in this case, because it's in local currency, so the balance fields are both the same amount. But if it is in different currency, you get to see, what's the actual currency or the foreign currencies of your bank account in the bank account card. Apart from that, in the bank account card, you get to define the bank branch number, or we call it BSP, as well as the account number in the bank account card. So this is important if you would like to use the, for example, the EFT functionality within Business Central. There's a standard functionality for that, and you can sort of define the account details to be used for your EFT file. Apart from that, in the bank account card, you do have the ability to set up, the address of the bank branch that you are using, for example, and that is a last statement number depending on when you last reconcile this bank account. So that will be the last number statement number that has been reconciled. And then there's a balance last statement as well. So if you have reconciled previously, so it will actually update the balance last statement in here, depending on the ending statement amount of your last reconciled statement. Apart from that, in the bank account card, you do have the ability to actually look at the ledger entries, which is the sub ledger. We call it bank ledger entries, and to see all these transaction or the transaction breakdown of it. and you can see whether there has been reconciled or not by looking at the open column here. If it is tick, means it's still not reconciled, it's still open. Once it's reconciled, then it will be untick. Okay. Apart from that, there is a statements function that you can use to actually see, all the statements that you have reconciled. I'll go into that in detail a little bit later, because it's related to bank reconciliation. Now I'm going to go through the bank reconciliation right now. So once you set up the bank accounts, you can, and post some of the transactions into the bank accounts. You can start doing the bank rec. So there is standard functionality in the Business Central. So I can go to the bank account reconciliation. For example, like for checking account, I can open up. This is one of the open bank accounts reconciliation that has not been reconciled. So what you're seeing on this page is that you do have the header section where you put in the statement date that you need to reconcile, the current statement, and then the balance last statement. You may carry over from the previous reconciled. Otherwise, you can actually put it in there manually for the first time. So, and then you can put in the statement ending balance as well for the statement you're trying to reconcile. So what you're seeing in here, there are two sections. One is on the left side and one is on the right side in this bank account reconciliation page. On the left side, it's showing up all your statement lines that you have, obtained from your internet banking platform. Basically, your bank statements, all the statement lines that you need to reconcile should be showing up on the left side, while on the right side would be the system entries or the bank account ledger entries that you need to do the reconciliation by matching the entries from the statement lines and the entries from the system. Okay, how you pull out the bank statements? You can always run the import bank statement functions. Is available in the Business Central. However, that function has to be set up to match, the file that you can extract out from your internet banking platform to be imported into BC. So it has to be set up first before you can actually start using it. That will require a bit of mapping and all these things in order to do the to complete the setup. However, we do have, as a microchannel, do have a advanced banking add-on that includes the bank account reconciliation, which support some of the major banks statements from the major banks. So you can use our banking add-on if you sort of to prevent the setup, the required setup to do the import bank statement. Okay. Apart from that. Once it's imported, as you can see in here, the two lines is, let's assume that it's from your bank statement lines, and this is two lines from your bank ledgers. Okay, so you can do the auto matching in the beginning by running the function match automatically. Try to match as many lines as you can between the system entries and the bank statement lines, and depending on the amounts, tolerance days that you set up when you run the automatic match, and also the description. So if they all match up, and the system will actually highlight it in green once it's matched. But for other entries that have not been matched, you will have to do it manually probably because of the mismatch of the amounts. Sometimes you have multiple bank account ledger entries in the system that's actually contributed to one statement line due to the bank actually consolidate that amount, for example. Then you have to run the match manually by highlighting the number of bank ledger entries related to one statement line, and then you can run the match manually. And if there's a mistake, then you can always remove the match from there. And once it's all done, you may have some of the statement lines that has not been matched with the system entries because it has not been recorded in the system. For example, like a bank account keeping fee, something you will only notice when you actually retrieve the bank statements from your internet banking, and has not been recorded. Then all these additional bank's fees, for example, which is only on the statement lines, you can always run the function called transfer to general journal to create the journal lines for you with that specific bank account that you're trying to reconcile. And what you need to do is you just need to select the balancing account, which is the, for example, the bank fees will be the expense account. After selecting the balancing account, you can post it up and come back to the bank account reconciliation page to do the auto match to match the bank fees from the statement line with the newly posted bank fees in the system. So you can do that as well in the bank account reconciliation. Okay, once it's all done, once it's all matches, the next thing you need to do is just to post it. So you can do the posting to finalize the bank rec, to register the bank reconciliation. However, in the Business Central recently introduced functionality, previously you're not allowed to sort of reverse your bank reconciliation. Now Microsoft already provided that function. So if you go to the statements function again in the bank account card, okay, this one doesn't have any bank statement that's been reconciled. Let me just go to another bank account. And if I go to the statement, see there's one statement that's been reconciled, statement number 1. And if I open up, I can see the details of what lines that's been reconciled. And there's an undo function right now. You can run this function if you sort of really made a mistake by matching into the incorrect entries in the system. You can undo it. What it does in the system will reverse this bank rec and also create a new bank reconciliation for you to correct. So this is one of the features that are pretty new in Business Central. Okay, so some of the things that you can do as part of the cash management module. The next thing I would like to go through is the deferral expenses. So the deferral expenses in Business Central is actually allows the automation process of deferring the expenses or revenue across predefined periods. This feature was first introduced in later NAV version, somewhere around 2016 or 17, and it often overlooked. It's a pretty useful function. If you find the need, the use of it, feel free to use it in the later NAV version or in BC. The deferral functionality, or as many has sort of called it a different way, called prepayments. So it's pretty much a similar thing. So you can call it prepayments. So it is used to, for example, to process like a prepaid annual insurance, or rent expenses, and then to spread expenses across the contract duration, for example, like 12 months. And how we're going to do it? We've got several steps to do the deferral. First of all, is that we're going to look into setting up a deferral expense account. If I go back to the chart of accounts here, I have already set up in advance. So I have set up one account called prepaid insurance expense. It's a balance sheet account, and that's how you normally set up for all the GL accounts. So you need all this information in there. Once it's set up, the next step is I need to create a deferral template. If I go to the page called deferral template, you notice that 2 deferral templates that have been created. So I've created a new one called prepaid insurance. So this deferral template will allows you to define, how you want the amount to be distributed. For example, I created a deferral template for prepaid insurance. I can specify the deferral accounts to use, which deferral account, which will be the prepaid insurance expense account in the balance sheet. And in the deferral schedule here, I can define, what's the percentage to defer. 100% is for the whole, expense amount to be deferred. And there's a calculation method here, equal per period. So the amount will be the same for every month, for example, to be distributed across like a contract duration. That is a different sort of calculation method you can use as well, like straight line days per days, depending on the number of calendar days. And then there's a start date as well. It can start from at the time of posting the invoice, for example, the purchase invoice for expense, or at the beginning of the period, or at the end of the period where you post the invoice, or even in the beginning of the next period. So you can set up the different start date for it. And a number of periods, this is where you can define the contract duration. Like, for insurance, that would normally be 12 months. So, so I just set up as 12. And the period description, I put in as 12 months. Once a deferral template is created, then the next step is, this is not a necessary step, but if you go to the insurance expense account, for example, this one, I get to define the default deferral template to use for this expense account. So whenever I post, I create a purchase invoice and select this insurance expense GL account on the purchase lines, the deferral template will be automatically triggered as I set up the default deferral template in there. Okay, so once it's all set up, the next step is that I can actually start creating the purchase invoice. Let's say for the insurance expense. Okay, you'll notice that the deferral code is already populated automatically because I set up the default deferral template to be used for that GL account. And what I'm going to do, I'm going to put in 12,000 for easier calculation. Okay. And what I'm going to do, if I run the preview posting, just to see now what are the GL entries to be created as I post this purchase invoice, you will notice that in the GL entries, there are 29 entries in total, instead of like 3 entries, like what you were expecting. Because what happened is that at first it will try to post the whole 12,000 into the 1st of July. That will be my invoice transaction date. And but there are also entries, as you can see here. It would transfer the whole 12,000 to the prepaid insurance expense account in the balance sheet, and slowly distribute $1,000 across 12 months from 1st of July onwards by sort of by pulling out the balance on the prepaid insurance expense account until the 1st of June 2021. So that will be 12 months. So it means that if you use the deferral functionality in Business Central, the system will create all the future entries for you as well, without you the need to manually create the month by month sort of a journal to actually pull out some of the balances from the prepaid insurance expense into the insurance expense account. So it's all done at the time of posting the purchase invoice. So this is the deferral expense or revenue that you can use in the Business Central. And last but not least, I'm going to go through with you the closing of income statements, which you will normally be doing it at the end of the financial year, depending on your financial year ending period. Okay, basically, to close the income statement, there are 3 steps. First step is to close the financial year in the accounting periods page. The second step is to generate a year-end closing entry using the close income statement function. And last but not least is to review and post the year-end closing entries so that it will transfer all your P&L balances for that financial year into the retained earning accounts. Okay, so in the first step, so we will have the accounting periods. Page that we need to go to. So you can actually close it by sort of running the close year function in the accounting periods page. So I can close anything that's not been closed. Let's say this is from 2017, but I'll just close because there's no transaction in 2017. I'll just close 2 years in a row for the demonstration purposes. including 2018 as well. So I closed 2018. I would like to close the financial year 2018, for example. Once it's closed, the next step you need to go to is to run a function called close income statement function that you can find using the search function. And the financial year ending date, depending on the your close periods, which is the latest close period, up until 31st of December 2018 for the demo company here, because the financial year is from January to December. And you can set up the general template and general batch that you want to create that closing year entries. So I just choose the okay, I'll just create a new one for simplicity purposes. Close year. Okay. And I can choose the retained earning accounts in here as well. And I can choose how you want to create the closing year entries for the retained earnings. You want to have one line per GL account for the retained earning entry, or you want to just look at the balance summary. So there will only be one entry created for the retained earnings account for all the GL accounts. Okay, once it's done, I can also choose to create the closing year entries by dimension as well. If I take all the dimensions available in my system, and if I click OK, the journal will be created. So if I go back to the journal, I'm just going to choose the new batch that I've created, close year. Okay, you will notice that these are all the closing year entries. And one way to find out whether it's a closing year entries is that the posting date, there will be a C at the front of the posting date. It means that it's actually the what we call the date between the last day of the financial year and the first day of the next financial year. So it is similar to the 13 periods that you can find in other, other systems. But since in Business Central we don't really have the 13 periods, so we will put it in the somewhere in between the last day of the financial year and the first day of the next financial year. So there will be C at the front. Do not remove that C, because that's how we can the system can identify this is the closing year entries. And once it's posted for this closing year entries, you can still sort of run the P&L report for the last financial year, excluding the closing year entries. Otherwise, if it's included as part of the normal posting date, then you won't have the capability to run the, let's say, the previous year's P&L. Okay, so once the closing year entries is created, the next step is just simply reviewing it, and then to post this closing year entries. And you will notice under at the end of the line, as I selected the balance, which is summary for the retained earning, there's only one line created with the amount for some of all the P&L accounts that I need to transfer into. So once I posted this one, the financial year 2018, we will not have any P&L balances in there anymore. It gets transferred to the balance sheet account, which is the retained earnings. Okay, so those are the things that you will be doing at the end of the year, or after closing the financial year, and have sort of gone through the audit process and been approved. Then you can always run the retained earning. But do not be afraid that the closing of financial year functionality is not sort of restricted to only one time. If you do need to sort of make any adjustment due to the advice from the auditor, for example, you can always rerun the closed financial year after adjusting the previous financial year. You need to transfer the balance again to the retained earning. You can rerun that however number of times that you want to. So it's not restricted. And also all the adjustment you have done after closing the accounting periods, you can still do the adjustment in the prior year. Only those entries will be marked as the close period entry. So you can still create any transaction to make the adjustment as you want to. So that's pretty much that you can find in the closing income statement functionality. And you just need to do all those 3 steps to close the entries and transfer all the P&L balances to the retained earnings. Okay, that's pretty much that we have covered for all the 5 topics we have.